From the studios of Farm Journal Broadcast, this is AgDay.
Investing in the land and in the future.
Stop number 4 in the Trust in Beef Sustainable Ranchers Tour brings us here to South Central South Dakota and Jorgensen Land and Cattle.
Could relief finally be coming in the form of lower prices at the grocery store? A look at the latest forecast for this year and next, as cattle markets weigh some surprises in this month's Cattle on Feed report.
We were vulnerable to this type of a number.
Is it a sign of things to come for the cattle industry? Right now on AgDay.
AgDay is brought to you by Pioneer. More farmers choose Pioneer brand corn because it delivers game-changing yields. Join a winning team. Pioneer brand corn. Your best year starts here.
Good morning, I'm Clinton Griffiths. What direction is the cattle market going? Well, a new batch of numbers might contain some insight. The latest Cattle on Feed report, released at the end of last week, had a bit of a surprise. The report from USDA shows 11.1 million cattle and calves on feed as of August 1st. Now that's up slightly from a year ago, but the big story was in the placements in feedlots during July, which totaled 1.7 million head, up 6% from last year, which is larger than expected. And while the news is slightly bearish, one market analyst told us the feedlots still marketed more cattle than they placed. Plus, the placements are being compared to tightening feedlot numbers in 2023.
Placement number, we were vulnerable to this type of a number, I thought, this month because we are comparing to a historically low number. In fact, the number that we got this time, just to give you some perspective, is still 98% of the 5-year average. So actually compared to the 5-year average, it was down 2%.
Still have relatively large numbers of cattle on feed, which will help supply cattle for slaughter in the coming months. But in terms of, the availability of cattle further for placement in feedlots, or whether animals are being retained for breeding, this report unfortunately doesn't provide us with any further information.
Cumia says the state-by-state breakout also shows a shift with more cattle being placed and on feed in the northern feedlot areas than in the south. Now that's due to lower corn prices and the premium the cash in the north has been trading to the south because there are more negotiated sales. Happening right now, trains are running again in Canada after an order was issued requiring there be no rail network stoppage during an ongoing labor dispute. The Canada Industrial Relations Board issuing the order imposing binding arbitration between the union and the rail companies. Canadian National restarted Friday morning, just a day after it locked out workers, and Canadian Pacific Kansas City ordered workers to return early Monday morning. The railroad said it could take several weeks to fully recover from last week's short lockout because they began gradually shutting down their networks more than a week ago, leaving shipments stranded on customer loading docks and at ports across the country. About 30% of freight the two railroads carry crosses the U.S.-Canadian border, carrying $1 billion worth of shipments every day, including fertilizer. And we got a new batch of crop progress numbers from USDA. The corn crop continuing to rate high with 65% rated good to excellent. That's down 2% from the previous week. For soybeans, 67% is rated in the good to excellent category. That's down 1% from a week ago. Checking on cotton, 40% is good to excellent, also down 2%, while spring wheat harvesting picking up, now 51% completed. That's 2% ahead of the 5-year average. And a sign that winter is just around the corner, UC Berkeley Central Sierra Snow Lab. Sharing this picture, you can see a dusting of snow at the Palisades Tahoe Ski Resort. This is base camp and it's at 8,200 feet. It reported a few flakes of snow occasionally mixed in with rain at the lab and that the snow was falling in the mountain peaks. It's been quite the opposite story in the Midwest with high heat returning to the area. Meteorologist Matt Engelbrecht let us know how long it will last.
Yeah, of course, the big story is that ridge of high pressure, the heat that is going to encompass a good portion of the Midwest. And the corn sweat that comes with it. The amount of water that the corn crop releases to go along with the heat really sends the heat index up above 100 degrees for a large portion of the Midwest. Now, I also want to take a look at what we have in terms of some cooling rain, although they might just add to the humidity. This is Tuesday at 7 o'clock in the morning. Ridge of high pressure back across parts of the United States, and then we'll have a few bands or a few isolated showers and thunderstorms work off of that high to the northwest down to the southeast. If you're under that ridge, it's going to be tough to get any kind of thunderstorms developing as the atmosphere is very heavy and what's called capped. So I'm not expecting widespread showers, but there are going to be some thunderstorms working with that heat, working across Michigan, back into northern Ohio and Pennsylvania in the days ahead. So there's a look at it. This is Wednesday at 6 o'clock in the morning. And not something you want to see when checking fields. Brett in Kansas sharing this picture. His daughter saying, quote, "Daddy, you need to water your corn. It's dying." Brett saying, unfortunately, it's not up to him. Only the big guy upstairs. Hoping you see some rain soon, Brett. I'll have more on your forecast coming up.
California is beefing up its efforts to fight wildfires, becoming the first state to own, operate, and deploy a C-130 Hercules air tanker to fight the wildfires. Now, the planes started flying missions yesterday. You're looking at the first of 7 C-130s the state is retrofitting and deploying. They'll be strategically located throughout the state at CAL FIRE bases. Each of the retrofitted tanker planes can fly 800 miles and carry 4,000 gallons of fire retardant. CAL FIRE reports it responds to an average of 7,500 wildfire incidents each year. China has fined 7 companies for their involvement in an alleged tainted cooking oil scandal. The scandal raising concerns about food safety after it was found tanker trucks that previously carried coal oil then transported edible oil without being properly cleaned. Among the companies fined, a total of $1.5 million a unit of the state grain stockpiler, China Grain Reserves Corps, also known as Sinograin. It received the largest penalty. Besides the fines, authorities arrested and filed criminal charges against 2 drivers involved in the transportation of the alleged tainted oil. Now, the investigation reporting that out of the 67 tons of contaminated oil transported, portions were sold in Inner Mongolia and used for animal feed, while the rest was seized before reaching consumers. Keeping you updated on the cost at the grocery store, USDA forecasters now predicting prices this year will end up only 1.2% higher than last year. And for next year, it's forecasting slightly lower price hikes than what they were predicting for food price increases this year. In fact, they say it's possible food prices next year could actually end up falling below this year's level, which has happened before.
In both 2016 and 2017, food at home prices actually dropped. In 2016 by 1.3%, and in 2017 they dropped by 0.2%.
Restaurant prices this year are forecasted to rise 4.1%. Cattle and soybeans try to hang on to some gains on Monday, while East corn drops into the $3.80 range. We'll talk about it next in Markets Now. And later, we're off to South Dakota to see how this ranch family is creating a sustainable future for livestock and wildlife in the country.
Earn revenue through the Bear Carbon Program. Simple, flexible, certain. Learn more at bearforeground.com/carbon.
Canada's government announced it's imposing a 100% tariff on imports of Chinese-made electric vehicles. Canadian officials saying Chinese companies are making a clear effort to generate a global oversupply. Canada's move comes weeks after both the U.S. and the European Commission announced plans to impose higher import tariffs on Chinese EVs. Canada's Prime Minister Justin Trudeau says Canada also will impose a 25% tariff on Chinese steel and aluminum. A former Canadian ambassador to Beijing says there will be retaliation. Corn sunk to start the week while feeder cattle futures soared. AgDay's Michelle Rook is back with this analysis in Markets Now.
Corn lower on Monday, but we did have soybeans and cattle to the plus side. John Payne with Advanced Trading is here to break it down. Okay, let's talk about soybeans higher on Monday, was that all weather premium being put in that market?
Well, I think the heat you certainly have to kind of keep an eye on. And I drove down to Central Illinois this week, and you can really see the crop is ahead in those parts of the country. And I think that any type of threat we have here certainly isn't priced in given the price action. And also in soybeans, we don't have to carry in. So the amount of supply that's available to be sold this very second it's not the case like it is in corn and wheat, where we had these supplies that were brought in from the year prior. It's not that case in beans. So the market's going to get its soybeans here in a couple of weeks, a couple of months. I don't think we have a whole lot of upside here, but I think that the market has probably done enough work to the downside. Crush margins are really good.
So new contract lows in both corn and wheat, and most of that was just first notice day pressure, you think?
I think so. I think you had options go in the books last week, a lot of new shorts coming in, and I think there's a recipe here to see a lot of folks buy back hedges as grain gets delivered, or simply you just get cheap enough. And I think we've been seeing that today. It's pretty active call buying from what I've heard from folks up north that are looking to protect crop insurance prices.
And cattle did manage to close higher. How impressed were you with that, John, considering we had a bearish cattle on feed report placement number?
Well, it's certainly helpful. I don't think that you're going to bury this market with a supply number like that. This is an overall supply picture that's very tight. Beef prices are up. That has a lot to do with the economy doing well. And yes, we're seeing slowing, but wages are still up and folks are still eating. And I think there's substantial upside to the cattle market next spring. I think in the short run, I'd be a little careful with it. But looking at that June contract for April for 2025, if you're a buyer, that might be a decent spot to jump in.
You think that cattle are trying to form a bottom, or are we getting close?
That's a little more bullish in my opinion, in the sense that those supplies just aren't there, and we're not seeing the heifer retention that I think is pointing towards more supply in 2025. So I think if beef prices can stay up at these levels, we'll see cattle survive regardless of what the placements and the marketing numbers are.
John Payne with Advanced Trading, thanks for joining us. We'll have more AgDay coming up. Watch Markets Now with Michelle Rourke on the Farm Journal YouTube channel, keeping you updated throughout the day on the markets at the open, midday, and close. Find out what moved the markets today and what to expect the market to do next.
As we look at the severe thunderstorm risk coming up for our Tuesday, we have the possibility for a few severe storms, and basically the shape of this indicates kind of what we've been talking about. The center of that ridge is going to be positioned back down here to the south, and we're going to get showers, thunderstorms developing and working off of that ridge. And with the extreme heat and available moisture, some of those could result in strong winds, severe winds, as well as hail, with the kind of ingredients coming together. Now, if you're too hot, like what we're going to be towards Memphis and Tulsa to the south of here, that's almost too hot to try and break the cap and get convection going. As we go ahead into your Wednesday, and see how we take this all the way to the East Coast with a few thunderstorms, possibly severe thunderstorms kicking up in parts of the Midwest as well as the Northeast. Again, in response to that ridge of high pressure to the south and these showers and thunderstorms working down off of that ridge. So a brief downpour, strong winds and small hail not out of the question coming up for our Tuesday and our Wednesday. And this is what it looks like with the jet stream. You got that ridge of high pressure dominating the forecast, something that we've been talking about going on nearly 7 to 10 days. So on Wednesday, that high sets up down here towards the south, and these little pieces of energy coming through the jet stream, that's what could kick off some showers and thunderstorms. Not that widespread. What will be widespread will be the triple-digit heat index. Temperatures actually close to 100 degrees, and then with that corn again continuing to sweat, the mature corn continuing to sweat, easily pushes that heat index to 105 to possibly 110 degrees. We'll start off with Louisiana. Mostly cloudy, high around 93 degrees, low of 75. Wisconsin, scattered thunderstorms, high around 80, low of 58. What about Vermont? Mostly sunny, high of 81, low of 65 degrees.
Milk production is down this year. We'll tell you how much coming up. And later, we're off to South Dakota to meet a ranch family investing in their land and the local wildlife in hopes of creating a more sustainable future in the country. A new report says U.S. milk production is below year-ago levels. That's according to the latest dairy market report from the National Milk Producers Federation. It says production was below last year during each of the 12 months from July of last year through June of this year, with an average drop of 0.8%. Now, it says dairy product and farm level prices, as well as margins over feed costs, have continued to rise in recent months as supply has kept pace with demand. As for trade, it says during the first 6 months of 2024, the U.S. exported the equivalent of more than 2% less total milk solids than it did last year. That includes an overall 12% drop for dry milk products, but a 23% increase in cheese. A settlement deal with California state officials over one company's planned acquisition of a slaughter facility is seen as good news for Western dairy producers. Cargill and Central Valley Meat are two of the largest facilities in the San Joaquin Valley that slaughter and process non-milk producing cows. The two facilities purchase culled cattle from dairy farmers. Now, earlier this year, Western Valley Meat agreed to buy Cargill's facility, and that sparked concerns about competition and fears that with less market pressure, processors could suppress prices offered to dairy farmers. Now, the AG also saying in a release that there was a risk the Cargill Fresno plant could be shut down altogether, and if the plant were to close, then local dairy producers would have fewer options to sell their cattle. The Attorney General reaching an agreement that the facility must remain open for at least 12 months and keep at least 700 employees on the job. Up next, how a South Dakota ranch hopes to keep their family on the land. And they're doing it by deploying a host of sustainable practices. We'll find out what's working next in the country. South Dakota was stop number 4 on the Trust in Beef Sustainable Ranchers Tour at Jorgensen Land and Cattle. AgDay's Michelle Rook shows us how other producers are learning from their sustainability journey, which includes land, cattle, and waterfowl.
South Dakota is a diverse state with intense cropping in the east, but as you move here into the central and western part of this state, it becomes a more semi-arid climate with a mix of cropping and native grasslands. And so that dictates that producers work in harmony with Mother Nature to be successful. The Jorgensens know that well and were early innovators of no-till and soil health practices, including a 6-year crop rotation.
So any rainfall that we get, we want to condition the soil, A, to take that moisture in, B, to hold it so that we can grow a crop.
7 years ago, their grazing management also evolved to rotational grazing for their 1,500 cow herd.
And then, over that time, we've been testing a lot of different technologies like, virtual fencing, things like that, just to help us get better about, managing that grassland.
On the tour, producers saw how the Jorgensen operation makes conservation a core value across their business.
They measure the carbon that they're hauling into the feed yard and the carbon that they got to haul back out of the feed yard back to where it came from to be able to sustain it. Because if you continually haul off the nutrients and the products off of that, then your land deteriorates.
Participants also got to see Jorgensen's cattle handling and vaccine protocols.
If you have sick cattle or you have cattle that have a lot of parasites, you're going to utilize more resources than you need to get the same amount of gains.
And Jorgensens rely on a trusted financial partner that understands their sustainability journey.
That return on investment is not just going to happen immediately, it's going to take time. So it might be some zero interest lending or some other programs there. We can help refer them to government programs or also maybe some third-party assistance as well.
For producers just getting started, there are various partners that can provide financial and educational resources plus data.
That can allow ranchers to understand more about their soils, their water, their animals, their locations, all these different pieces. And so we provide all those tools as part of our program free for the ranchers so they can really build a robust and really optimize their grazing programs.
Ducks Unlimited has also helped producers conserve 1 million acres of wetlands and grasslands, which are habitat for ducks.
So the work that we do is often helping them with grazing systems. We do cost share on fence and water structures. We help with cover crops. That'll be helpful with forage at other times of the year for ranchers, and also helps with water quality.
All this helps producers reach broader sustainability goals set by the food chain.
To be environmentally sound, socially acceptable, and financially viable. But what it really means is, when it comes at the producer level, it just comes down to better ranching. Continually improving your operation.
I'm Michelle Rook reporting for AgDay.
All right, thanks, Michelle, and look for more of Michelle's Sustainable Ranchers Tour stories in the coming days. And that's all the time we have this morning. We're sure glad you tuned in. From all of us here at AgDay, I'm Clinton Griffiths. Have a great day.